your patience. And yeah, without further ado, so I'm just going to introduce Ben Tsai, who's the president and managing partner at Wave Financial, and he's also portfolio manager at Wave Kentucky Whiskey Digital Fund. So, Ben, I'm passing the baton to you, please.
Great. Hi, everyone. I've just started my presentation. I hope everybody can see this. We are today here to talk about the Wave Kentucky Whiskey 2020 Digital Fund, and also talk about whiskey investments in general. I'm very excited to do this. I've done this quite a number of times, and I'm looking forward to telling you all about this. Excuse me. Before I start on the whiskey itself, let me start by quickly introducing myself and also about our firm. My background is actually in traditional finance. I originally started working in finance after business school with Merrill Lynch. I was there for about 12 years. I ran equity structured products and fixed income structured products. And thereafter, I moved over to the commodity side, and I ran the commodities business for Merrill Lynch across Asia. Thereafter, I moved over to the buy side. I spent 3 years with AllianceBernstein looking after alternative investment. So my background mainly comes from creating products for high net worth institutional investors and sovereign wealth funds for the various different asset classes. A few years ago, I met up with David Seymour, our CEO, and the two of us started Wave Financial. And his background is on the VC side. So for us, our focus is doing asset management, wealth management in the blockchain and cryptocurrency space. We decided to explore the idea of having a tokenized asset fund, hard asset fund, because we really believe that hard assets is a good place to be in. So we looked at various things. We started looking at carbon credit, and then we looked at clean water, and then we looked at real estate. I'm a real estate investor myself here in Southern California, and we looked at also Picassos on the collectible space, and even Japanese racehorses, really to try to make sure we're looking at all the different possibilities. And we ended up on whiskey because whiskey really has a great return profile. So let me make sure the presentation is working. So here I have a chart of the current prices for whiskey. As you can see, we can currently buy a barrel whiskey for less than $1,000 a barrel, and a 5-year-old whiskey we can buy, or it's available at over $3,000 a barrel. If you think about that very simply, you're looking at a 3 times increase in value over 5 years. And this is today's pricing, and our estimates in 5 years is actually a price between $3,000 to $5,000, putting in inflation and increase in pricing and so forth. In terms of the value increase, we've taken a look at the research, and what we're seeing is a 7.5% growth, average compound growth rate of 7.5% for the super premium and the high-end premium space. And that growth is on an annual basis, and this is based on industry data that we've seen. And this type of information we thought was very interesting, so we really dug into it a lot more. My colleague Andrew and I actually flew out to Kentucky 3 times in the first 6 months of this project, and we spent a lot of time with distillers, with consultants, with advisors, with lawyers. We even spent time having multiple meetings with the Kentucky Distillers Association, who are in place to look at promotion of Kentucky whiskey internationally. Domestically and internationally. So we found that to be very interesting. We also hired a consultant in Kentucky who helped us do a lot of this research, and she's the one that got us the industry data that we see here. Another thing we found is that the historical price increase has also been very solid. This is a chart that goes back to 2007, from 2007 to 2019. Other than 2009, there's been a very steady single-digit increase, and even one double-digit increase in the price of whiskey in the past decade plus. The only time it came down very slightly was 2009, and that was the impact of the financial crisis, where by price, by dollar amount, it came off 1.4%, and by volume, only 0.7%. a 0.7% drop in volume is actually a very small variation in the growth of this market. And we believe that this is a very resilient asset class. Also, we're seeing a significant increase actually in demand and in sales for American whiskey this year due to the pandemic. I think as more people are stuck being at home, I think the consumption of alcohol has actually gone up. We believe that because of that, this asset class is very good from a counter-cyclical perspective, where it's very strong during crisis situations and so forth, and it holds its value well. On top of that, as per what I was mentioning before, we have a very strong view on hard assets because we believe that the governments around the world are printing a lot of currencies, as we would say, a lot of fiat is being printed, not only in the US, but in major markets to try to support the market during this pandemic. In the short term, it makes a lot of sense. It pushes markets into a little bit more of an inflationary turn. But unfortunately, over the long term, with so much currency printed, that extra money needs to be absorbed, and that absorption will reflect in an increase in value in assets and in typically in hard assets. We're already seeing that in the US with real estate and so forth, and we're starting to see that with other asset classes. The whiskey that we're working on right now, we're still based on 2019 numbers, so they haven't gone through a state of inflation across what we're looking at, but we believe that that will increase in value, and that's part of why we think that the pricing should increase. Now, after all the research we've done, all the discussions we've had in Kentucky and so forth, and all of the research that we had our consultant in Kentucky do, we decided that this is a great asset class from an investment perspective. Just as a review, we can buy whiskey at the start for $1,000 a barrel, and in 5 years, it should be worth $3,000 to $5,000. So on an underlying asset perspective, it's 3 to 5x across the 5 years. And if we include the calculation, the cost of storage, insurance, taxes, and also creating a fund and wrapping this product, we're looking at a net IRR for the investors of over 20% per annum. And that's using the $3,000 estimate. If we use the $5,000, obviously it's much more. It would probably be roughly double that. And the investor multiple we're looking at is 2.3 times, once again, based on the $3,000 number. And we're actually very comfortable with these estimates. The $3,000 number, as I mentioned before, is the 5-year aged barrel price right now. So in 5 years, that number should be higher. And we're able to back into that number very reasonably just by looking at what's available here in the liquor stores and in the sales channels. As an example, we're working with whiskeys here in Los Angeles, and the whiskey we're looking at, which I will talk about more in detail, typically retails for about $60 in stores here in Los Angeles. If you take a look at the $60 price, 2/3 of that typically goes to the distributor and the retailer. And therefore, at the distiller level and at our level, we're looking at roughly about $20 a barrel, $20 a bottle. Out of that, if we conservatively say $5 goes to the glass bottle and the labeling and the initial shipping, which is a very, very conservative estimate because obviously they buy in bulk for glass bottles and so forth. So the cost is actually much lower. But even if we use that, we're looking at $15 for the juice that's inside the whiskey bottle. Each barrel at year 5 can pour out 200 to 240 bottles. So if you multiply that by $15 a bottle, what you're getting is that the actual value of the whiskey is roughly $3,000 to $3,600 a barrel. Also, just as a side note, these barrels, after they're used for aging a bourbon, there's a secondary market for that because they ship these to Scotland for Scottish whiskey aging or to other places for reuse. And that reuse value is about $100. So these barrels are worth $100. So these barrels, just in today's value, in my simple back of the envelope calculation, is worth $3,100 to $3,700 for each barrel of whiskey. So hopefully that gives you a good feel that our numbers are very realistic, very achievable, and they are what I would consider, commodity numbers. These are numbers that are feeding into the local liquor store. This is not an auction house price. There's not a large fluctuation of whiskey prices in 5 years. So our plan is our fund, and I wouldn't even call it a plan. We've already started executing on this. We are buying whiskey and we are storing whiskey. And then at the end of the aging cycle, which is 4 to 6 years, we are actually going to sell whiskey. One of the questions I typically get is, who do we sell it to? How do we get rid of the whiskey? And I want to be very clear, we are not in the business of marketing the whiskey at a retail level. I'm not putting my face on the glass bottles. We're not hiring George Clooney or Ryan Reynolds to promote alcohol. What we're going to end up doing is we are going to sell it back into the wholesale market. And that wholesale market is actually a very vibrant market in Kentucky. So I'm not sure if this is common knowledge to everybody, but this is something we found out when we visited Kentucky, that a lot of the distillers actually trade barrels amongst each other. And this is commonly done if they had a shortfall in terms of aging, in terms of flavor profile, in terms of mash bill, which is really the recipe that goes into the whiskey. So let me kind of go over the different channels that we can sell these whiskey barrels back into. First, we could sell it back to the original distiller that made the barrels for us, that are storing the barrels for us, and I'll talk about them in a bit. Second, we could sell it to other distillers, as I mentioned before. These distillers are all looking at buying through a broker's market that we'll be accessing. Some of them will buy because they didn't have an old enough whiskey or different flavor profile they wanted to achieve. So we'll buy the whiskey and blend it together and sell the blended whiskey together with their own productions. The third channel is what's called NDPs, non-distiller producers. Non-distiller producers are whiskey makers that don't have their own distillery or their own aging warehouse. What they do is they buy aged whiskey so that they're more of a balance sheet light model. So they buy their own whiskey. They would they would blend it with other whiskeys that they have in their collection, and then they would bottle that and market that. And their power is more in the distribution and the marketing side of it, along with blending to achieve the flavor profile that they want. The final channel is the international channel, and that international channel works similar to the NDPs. They basically come into the US, they buy the barrels, they put the liquid in a tanker, and they ship it off into their own country. They will bottle it locally, have local brands and local channels, and then they would basically sell that into their own distribution channels locally. And this is something that is I think is very interesting from that perspective, where we are selling into different channels, and this keeps our pricing competitive. I see some questions come through. I'll try to answer them at the end of the presentation, which actually I'll wrap up pretty quickly so we can get to questions. So the next slide is on Wilderness Trail. Wilderness Trail is the distiller we're using right now. This is one that we have a relationship with and that we have secured production capacity. This is one area that we had, something that we had to work on a lot. I think conceptually, it's easy to see that the financials make sense, but it's not very easy to secure large amounts of production capacity to set up a fund like this and to get it going. So what we've done is we've gone to Kentucky, we've done a lot of networking. We were introduced to Wilderness Trail, which is a great ultra premium distiller that is distilling whiskey in Kentucky. They've been around close to a decade, run by two guys who have over 2 decades of experience in the fermentation space. They've been consultants to a lot of the distillers and also wineries and also industrial use, fermentation for kind of alcohol production. So they're really experts in adjusting their fermentation process to get the exact results that they want. About a decade ago, they decided that they wanted their own distiller. So they bought a piece of land, they built the distillery. I think the distillery was originally in Louisville. And as they expanded, they moved out into Danville, which is where they're at right now. So they're building that business up, and they've been aging for a while. They've been producing whiskey and aging it for a while. And we formed a relationship with them so we can buy their excess production capacity. And we're very excited with this relationship. The two operators have just actually won the Ernst & Young's prestigious Entrepreneur of the Year Award 2020 for their region. And also their rye bourbon actually just made it on the list of the top 100 spirits for wine enthusiasts. It's actually a very amazing field. Out of 100 spirits they looked at globally for this year, they picked 14 in the bourbon space. And out of the 14 in the bourbon space, they've assigned a score. And they had a score of 94, which is a very, very high score. And their score actually was just below 3 other bottles. And 3 other bottles are from major distillers like Old Fitzgerald, Maker's Mark, and also Four Roses. So they were kind of tied for number 4 after these 3 bottles. They also sell, they also store and sell a large volume whiskey. So they're considered what they called a heritage producer because of the volume that they have. And they're part of the Kentucky Bourbon Trail, which is something that the Distillers Association actually put out as a map. It lists all of the major producers on the front page, with them being one of them. And that's with Jim Beam, with Four Roses, with Wild Turkey, and other major brands out of Kentucky. So we're very happy and proud to be working with them. I've been out there visiting their distiller, and I actually took some pictures. So these are actually pictures that I've taken myself. So I thought I'd share some of that with all of you. I think pictures are always good. Upper left-hand corner is their gift shop and their tasting area. Behind the glass, you can see a very big fermentation tank, and that's where they do a lot of their work. The shot in the center, and this is the start of the process to make whiskey, and I'm just going to go through this pretty quickly. What they do is that they have a cooker where they put in the different mash bills or different recipes of rye, corn, and wheat and barley into the cooker. For bourbons, it has to be at least 51% corn. I can get into details of what they produce shortly, but basically they cook that. And the cooking process is supposed to break the sugars out of the grains in a soup. In the upper right-hand corner, you can see that they put that mush into a large 4,000-gallon fermentation tank. The picture taken is actually from a second floor scaffolding. So these 4,000-gallon tanks are actually 2 floors high. They would add the yeast, and the yeast basically converts the sugar into alcohol. And that process is over 2 days. And so I've included 2 photos there. The lower left-hand corner of this slide is another shot of the fermentation tank. So you can see how big these tanks are. Once again, this is from a second floor shot, and they have many, many of these tanks. The photo in the center is on the 4th day. The soup is now cooked. The sugar has been converted to alcohol. They put it through these stills, which are these vertical copper pipes that they run through, where they go through a distillation process, and they draw out the alcohol in the liquids, and they dump out kind of the leftover grains and so forth. The alcohol is typically drawn out at roughly 140 proof, which is roughly 70%. And there's some variation in it. So they add water so they get a consistent 120 proof that goes into the barrel. In the lower right-hand side, it shows the warehouse with the barrels in them. Kentucky whiskey uses freshly made barrels with American oak that's charred on the inside to a certain level of charring, and that charring gives it the smoky flavor to the whiskey. So these barrels would be filled with 120 proof whiskey that's just been distilled, and that's what happens on the 4th day. And these barrels go into the warehouse, and it sits in the warehouse for the next 3, 5, 10 plus years in terms from an aging perspective. We are currently working with Wilderness Trail. We have, we have some barrels stored in their warehouse already, and I'll talk about that in just a bit. In this last photo, these are actually photos not taken by me. They're taken by Wilderness Trail that's sent to me. These are actually the whiskey barrels that we have bought. Our fund actually was launched in the summer, and we've done 2 closes already. We've gotten over $2 million of commitment. Most of that money is already in, and therefore we've taken the liberty to buy some whiskey already. So some of these these barrels, the photos of these barrels are photos of the whiskey that we own. If you can read closely on the photo, I'm not sure if you can see very well, but on the upper right-hand corner, there's printed WAV, which actually specifies our specific barrels. I'm actually quite proud of these barrels. I took one of these photos and actually printed a canvas to put on my wall here for as a souvenir. On the right-hand side, where you see some of these initial samples out of the whiskey barrels, I have these sitting in my house also, just as souvenir. These are actually not very good to drink because they're freshly made whiskey that have gone through no aging. So they're really there to test the sample and look at the quality of that. So in terms of mash bills and so forth, I think I have a question on mash bills, so I might as well address that. Wilderness Trail makes mainly 3 different types of whiskey, and they have different age versions of that and different either blends or single barrel versions of that. But basically, they have 3 different kinds. One is a wheated bourbon. As a bourbon, they have 64% corn, 24% wheat, and 12% in malted barley. That's a standard recipe that's very popular in Kentucky. I mean, the specific recipe varies, but wheated bourbon is very common. It's typically what a place like Jim Beam would typically put out as their core product. Pappy Van Winkle is also a wheated bourbon. The wheat is usually produced locally in Kentucky, so it's very much a representative Kentucky whiskey. We've bought 1,000 barrels of that, and that was made on our behalf in September, and it's sitting in storage right now. The new and more recent trend, and something that's very interesting, is a rye bourbon, which is 64% corn, 24% rye, and 12% wheated barley. So instead of the 24% wheat, we put rye in there, and that gives it a rye bourbon. It's a sharper flavor profile, and a lot of people like that right now. That is actually what is listed on the top 100 spirits by wine enthusiasts. It's something that people quite like. The third type of whiskey that they make, for the rye whiskey, we've ordered 500 barrels and they're being made this month, and we should have that in our inventory shortly. The third type of whiskey they make is a rye whiskey, which is, I think, 56% rye. So it's more of a rye-oriented whiskey, so it's got an even stronger profile. It's not considered bourbon because over 50% is now rye as opposed to corn, so they can't call it a bourbon anymore. So these are the 3 products that they typically offer. They also offer, the current bottles are about 4.5 years old of aging, and they also offer a 6-year age-labeled product, which is a little more full flavor, a little more rounder flavor because of the slightly longer aging. Obviously, that sells at a slight premium. So moving forward, as I mentioned before, we have a fund. We've already launched the fund. We've done 2 closes already in June and in August. Our final close is in December. We're hoping to see if there's any more interest from all of you. I think today, this presentation is probably the last group presentation I'll be making. I have a few more individual presentations to potential investors, but this is kind of the final call, or the last call, I guess you would say. So our target is to, we have capacity to do $10 to $20 million worth of this, and we're hoping to have a bit more orders coming in from everyone. So one last thing that I'll mention is that we've set this up to have a tokenization process. So if you take a step back and look at our fund is basically a private equity type fund. It is something that we are, excuse me, sorry. It's a private equity type fund. We are basically taking clients' money at first. We're hold on to it. We're going to buy whiskey. We're going to let the whiskey age, and then we will sell the whiskey in 4 to 6 years, and then we'll return the money to the clients. There's no cash flow in the middle, and we're really counting on the increase in value of whiskey to return the investment return profile that we've promised before. Normally in a structure like this, there's no redemption. We can't do anything with liquidity in the middle, and pardon the pun there, because I don't hold any cash. As a portfolio manager, I don't hold any cash, so that if anybody comes and wants to redeem, I have no way of redeeming them and giving them their cash back. So there is a lack of liquidity in a traditional structure of private equity. What we've done is we're going to move the ownership structure onto a blockchain as an optional feature. For those investors that are interested, they would be able to pick up the tokens. And once they pick up the tokens, they're able to list the tokens on a listed exchange, listed security token exchange, and be able to trade that with other buyers that may be interested. It is not a guaranteed thing, but it's something that we have. It's not a guarantee that there will be buyers, but we are providing a potentially liquid market for this. We've already signed a letter of intent with INX, which is the largest security token exchange in the US, because they've just bought Open Finance Network, and we're looking forward to collaborating with them. Our tokens will be available 1 year after we do the final close. And this is due to regulatory reasons, and also simply due to the fact that, nobody really buys 1-year-old whiskey. So, it's hard to establish kind of the market value of that. So this is what we plan on doing, and hopefully this provides a liquid market for everybody. As a final point, through our tokenization process, we were considered, and we actually won the Best of Class Asset-Backed Token Award at the Blockchain Week 2020 about 3 weeks ago. And this is due to the fact that we were very innovative with regards to having this product. And also, it was one of the discussions that we had, which they thought was very interesting, was the fact that with a market like this, we will not only have the producers of the whiskey, the investors, but also potentially the consumers or the buyers, other distilleries that could potentially come and buy the tokens and use that as hedge. If you have the producers, the consumers, and the investors in a market, you're really creating a commodities market to be able to trade these barrels. And I think that's something that they thought was very interesting. And that's something that, because of my background in commodities, I was very excited to do. So this comes to the end of my short presentation. I'm going to stop here for a moment. I am going to answer some questions that we've got. I'll leave this slide on. My email address is on there, ben@wavegp.com. Also, our associate, Andrew at wavegp.com's email address is on there also. Feel free to email us with any questions that you may have or interest. Let me kind of go to some of the questions that we've got, and I'll try to work through these questions. It's funny, I've got a chat channel open and a Q&A channel open, and I'm reading both of them, and we are getting kind of various different questions, and I think that that's very good. So feel free to add more. The first question is, I'll just answer them in order. Wilderness Trail. On a given distillery partner. Okay, so the question is, how do we verify the quality of product and so forth, and also the determining optimal mash bill with regards to the whiskey that we're doing. So what we've done is we partner up with Wilderness Trail, and Wilderness Trail is providing whiskey to us. Because they have a good reputation in the mash bill that they've used and that they've perfected over the past 8 years, we've decided that we will start with their mash bill. I don't claim to be a genius in whiskey, and I don't claim to know a better mash bill than somebody who's been in business, who's winning awards and being recognized for their mash bill in terms of production. So I'm going with the two mash bills that they're doing right now. One is the wheated bourbon, and the other one is the rye bourbon for now. We will probably also order a little bit of the rye whiskey, so we have some of that exposure, but that's something that we're considering. We haven't yet decided. The quality of the whiskey is being verified by them. And also we have an independent consultant who is based in Kentucky that is going to go and check on the whiskey. And Andrew and I are also planning on visiting Kentucky on a regular basis. We'll be there at least once a year, if not more often, to check on the whiskey itself, both in terms of quality and in terms of kind of their existence sitting in a bonded warehouse. The whiskey themselves will be tested annually. There'll be spot tested annually on a using spectroscopy. I'm sorry, always hard to say the word. Using spectroscopy to check on their chemical content, and we'll compare that with the chemical content of what they use, what Wilderness Trail typically sees. Wilderness Trail, because of their fermentation business, they actually have a lab on site for chemical and analysis of whiskeys from their own batch, and also from other distillers that rely on them for that testing. So we can get very, very scientific with regards to the type of analysis and records and so forth that we have. I hope that helps. Feel free to add on subsequent questions. Moving on to the next question, are you open to US-based investors only? No, we have a US investor. We have a US entity for US investors. We also have a Cayman offshore feeder for international investors that are investing into our fund. Feel free to let us know if you have interest there, and we're happy to provide the right documentation for the right entity that you would be investing into. The next question is, can the tokens be exchanged for barrels, or does a token just receive proceeds of the eventual barrel sales? I want to be very clear. These tokens are a representation of the fund and not the barrels themselves. And the reason for that is simply because when I sell a barrel, I don't really want to be a person that is identifying the specific barrel that I've sold. So Mr. Investor A's barrel versus Investor B's barrel and so forth. And I think there would be a contention of whose barrel I would be selling, and quite difficult in terms of a coordination. So what we've decided to do is we'll do it on a fund basis and in a fund format. And therefore what would happen is when we sell a barrel, everybody would own fractionally less barrels. We have not set it up so that we will deliver barrels to the clients, but we're happy to entertain discussions where the clients want to come in and buy a barrel for themselves. And there are certain licensing, and I'll get into licensing in just a bit, but there's certain licensing issues. So we're not really able to directly deliver the barrel to the clients in a barrel format. What we would have to do is we typically can help the clients drop the barrel into glass bottles and print some fancy labels that they may want, or their name or their photo of their face, and we could stick that on the bottles and have that be delivered. Those bottles, typically you'll get 200 to 240 bottles depending on what age you do your whiskey at. And that can be done, but that involves having the not only the distiller, but also a wholesaler and a retailer involved in that chain. So we would have to get all those people in chain and all the costs involved associated with that, along with bottling and all costs and so forth. All of those costs, if the investor is willing to cover them, we're happy to deliver the alcohol to them in whatever format they want. This is something we're offering to the investors, and if they really want it, if they're willing to cover the cost. And kind of going back to this, the reason why it's this complicated is simply from the licensing perspective. The Kentucky whiskey market is a very complicated market and has a lot of regulations that have lasted a long time. And some of this stuff was put in since the lifting of the prohibition. The idea is that there are 3 tiers of licensing. There is the distiller license, where companies are allowed to distill. There are distributor licensing, where companies are allowed to wholesale whiskey from distillers to retailers. And then there's a retail license, which is just for retail sales into retail clients. So a lot of times, if you go to a distiller's gift shop, it's funny, that gift shop, the alcohol there is actually not sold directly from the distiller. It's actually sold from the distiller to a wholesaler to a retailer, and that retailer puts it back on the shelf at the distiller for purchase, just because of that licensing process. So, it's a way for the U.S. to try to protect that industry. It's from, I think, our more common modern way of thinking, it's a little bit backwards, but that's the way it's set up, really to protect the local liquor stores and to protect a lot of the distribution channels in the US. There's a question with fiat versus BTC ETH. This fund, actually, we're only taking fiat. We're really only taking US dollars. We're buying the whiskey in US dollars. If you have a foreign currency, I'm sure the bank can arrange for dollars to be delivered to us, where you're converting with the bank on delivery. And we're really only taking dollars. We looked into taking BTC and ETH or other currencies, and it's a bit more complicated than it needed to be. So we've decided to take that out, because this is really not a crypto fund. There's no crypto component to this fund, and we thought we'd just keep it simple. I'm looking at questions again. So one of the the audience asked about special licensing required for investing in whiskey. I hope my answer was good. We do not have a license for transferring of titles in whiskey. We are buying the whiskey that's in the warehouse. So the title transfers to us when it hits the warehouse. The warehouse is a bonded warehouse, which means it's federally regulated, and the whiskey is tracked by the federal government. They don't do that out of the niceness of their hearts. They do that really because they want to collect taxes on it. But for what it's worth, it's tracked, federally. So there's not a need for us to get a license to be just holders of whiskey. When we want to sell, we'll typically use a broker dealer that has a license to be able to transfer the title. And typically the buyers arrange for the pickup of the whiskey from the warehouse, but we can also help arrange for logistics as necessary. Some of the international buyers may ask for logistics and transferring and so on and so forth. So yeah, feel free to add any other questions. I think there are 2 points I typically answer with these sessions also. I'll try to address them now as we wait for more questions. One is, the risks associated with this fund, with holding of whiskey specifically. And I will start with the holding risk. The biggest risk, actually, funnily enough, is actually fire. We've heard cases where a warehouse could be lost to fire, which, if you think about it, is actually not very surprising. You have a barrel of whiskey, a wooden barrel with 60% alcohol in it, in a wooden warehouse. And when a fire starts, it actually burns quite a bit, and it's very difficult to put the fire out. A lot of times the fire department would just let it burn to the ground and have the distillers clean up afterwards. So it's really more of a safety issue rather than trying to recover some whiskey. It's actually quite difficult. The whole process, the biggest risk is actually due to fire. There are some other smaller risks of tornadoes and earthquakes and other natural disasters with regards to the warehouse, but all of that is covered. We are actually going to be buying insurance. We'll be renewing it annually, and we'll be buying it at the market value of the whiskey. So if we had a disaster where we lost a part or the total inventory, we would be able to call the insurance company and get our money back. And this actually happened before, not with us, but with other distillers. So Jim Beam actually lost a warehouse of 44,000 barrels, I think 2 years ago, and they were able to call the insurance company and get their money back. So that's really the biggest risk. We looked at a few other risks. Before I ever went to Kentucky, I thought maybe theft is an issue. We talked to the distillers. Theft is not at all an issue for various reasons. One is a barrel of whiskey is very hard to steal. Each person can probably carry or roll one barrel. So, as we said, between $1,000 to $5,000 is not really worth the effort to steal the whiskey. The second thing is, when you steal a barrel, it's not a finished product, so it's actually not that great. You'd have to actually kind of filter it and get the alcohol out and so forth. So that in itself is not an easy process. And the final point, which actually is probably the most important point, which is that whiskey warehouses in Kentucky are federally bonded, and they're considered bonded warehouses, and therefore they're regulated by the federal government. And if you steal from the federal government, it's a felony instead of a misdemeanor. So it's a much more serious crime to steal out of a warehouse than to steal a few bottles out of a liquor store. And obviously when you're stealing at the liquor store, you can find high value whiskey and finished products and so forth. So there, for various reasons, theft really isn't a big concern. We thought a few others. There aren't really a lot of other risks, really fire being the biggest one, and we're covering that with our insurance. So I've got another question. Actually, let me finish the insurance question. I think one question was with regards to whether insurance covers theft. The first year insurance does not cover theft because we have a smaller insurance policy at year one because it's worth less than $1,000. As we move up, we'll consider buying insurance for theft. This is something we're in discussion with our insurance company right now. I think we're balancing the risk of theft, which is very low, versus the value of, or the cost of the insurance that goes on there. So, we're considering that right now. I have another question. What is the minimum investment? The minimum investment is $100,000 US. If you need a size smaller than that, feel free to contact me directly. We can have a discussion. We've got another question with, why do distillers sell barrels? That's a very good question. I think we get that question typically from the finance guys who are looking at this, and I think it's a good question. The question is, why do distillers sell the barrels to us if they can make a lot of money from it? And I think the right way to look at it is this. Wilderness Trail, the two guys that founded it from 8 years ago, have spent a lot of money in buying a farmland, a huge piece of beautiful farmland. They built the distillery. They've built the equipment. They bought the equipment. They built the distillery, and they've been aging whiskey for about 8 years. They've started to release whiskey about 2 years ago, and then last year, really 4.5-year-old whiskey. Now they're releasing their 6-year batch. They're finally starting to see some cash flow with regards to the business that they've been in for the past 8 years. They went through a capacity expansion, which costed them about $10 million in 2017. And therefore, they've spent a lot of money, and they have a certain level of debt already. And therefore, they have a lot of capacity, but they don't have the balance sheet to use up 100% of their capacity. So until we met them, or when we first started talking to them, they were running their capacity at about 5 days a week and leaving the machines off for 2 days. But since they already own the equipment and the land and everything, those 2 days are kind of wasted. It's capacity that they have that aren't using. Since our discussion, since them coming to terms with offering that to us and to other people, they've ramped up to 7 days a week production. And that excess capacity, and some of which they can't take on with their own balance sheet, they're basically letting us have. So we have about 1,000 to 2,000 barrels of production a month of excess capacity that they're offering to us. And we're taking that and we're packaging that in a fund for everyone. I do know there are other distillers that do distill similar in the similar fashion, but some of the larger distilleries like Jim Beam and so forth, when I went and talked to them, they do not sell their barrels out. Jim Beam is owned by Suntory. They probably have, infinite balance sheet with very cheap borrowing rates out of Japan. So, they make as many barrels as they want with their balance sheet. Whereas the smaller makers like Wilderness Trail that we work with, and some of the even smaller boutiques would typically look at, spreading their production capacity out to other people. One last thing is we're paying them monthly also for storage. So they have a steady cash flow stream coming in, which helps them pay employees, use as operating capital, and kind of keep the lights on. So that's another reason why they would want to do this. So I hope that that helps. Happy to take on other questions if there's anything else. So one other question that we typically that I typically get asked is, oh, okay, I got another question coming in. Let me address that. Would you ever sell at 2 years? How long? Hold longer than 6 years? That's a good question. We are looking at when we would sell. So let me kind of get into that a little bit. And I think it comes down to actually who the buyers are and what price we would get. So just to take a step back, I'll talk about the buyers. Typically buyers in kind of the Kentucky space, they're looking at 3-4 year whiskey. Sometimes they'll buy a little bit earlier and then they will transfer it to another barrel and age it to try to get a different flavor profile, trying to get fancy, put it in a sherry cask or put it in a different flavor, a different wine cask or barrel to get a different flavor profile. So they will buy younger whiskey, but typically the buyers of younger whiskey, what we're seeing is some of the European buyers that come in. So just taking 2 steps back, a big picture of export markets. Spain is the biggest buyer of whiskey, American whiskey outside of America. Japan is number 2. Australia is number 3. Spain or Europeans in general buy younger whiskey, 2 to 3 year aged. They'll ship it to their country, sell it as a cheaper whiskey product, cheap American whiskey type of product. And on the flip side of that, the Japanese typically buy older products, 8, 10, 12 year aged, and then they will put it in a premium American bourbon product that they offer to their market. As an example, like a Blanton's would be aged 10 plus years and so forth. And it's a premium product, sells at a premium. And that brand was really just created for the Japan markets. And that brand is actually owned by one of the Japanese sake makers. So what we're seeing, if we were going to sell at 2 to 3 years, we probably would not at 2 years. But from 3 year on, we would consider it. The other thing is we probably want to sell a very small portion at maybe 2-3 years, just for a mark-to-market perspective. So if we were able to sell 1 barrel or 10 barrels at a certain price, that means the rest of our barrels very roughly are worth that value. And from there, we would be able to provide that information to all of our investors as kind of the way we're calculating NAV and so forth. So we get a lot more comfort in the increase in value of the whiskey. So from that perspective, yes, we'll look at selling small parts of it. But our goal, my goal as the portfolio manager of this fund, is trying to achieve that 20% IRR number. And I don't think that's achievable really at 2 to 3 years. The whiskey value increase doesn't happen very much until year 3, and between year 3 to year 5, where that's a pretty steep increase. So that is a switch from going from a not an attractive product to an attractive product. From year 5 on, it actually levels off once again. And so year 5, 6-ish is where kind of you're peaking in terms of gathering value for the fund. And from year 6 on, a year 7 whiskey and a year 6 whiskey probably wouldn't be priced that much differently on the shelf, and therefore from that perspective, we wouldn't really want to try to age this for much longer. And I don't think there will be buyers that would pay significantly more for a year 6, year 7 barrel versus a year 5. So we want to be very cognizant of that flattening out. We know that picks up again past year 10, but we really are not interested in managing this fund past 10 years. And mathematically, we've taken a look at that and see, where that would catch up. And it would actually take many years of significant increase to catch up on the back end. So, our target sweet spot is really 4 to 6 years. And I would say, to be even more precise, probably, 4 to 5 years being a tighter range, and us trying to wrap that up in let's say 5 years or so. So hopefully that answers that question. So I was just about to say, one of the other questions that I get when I speak with Asian investors is, or a lot of comments I get from Asian investors is, oh, I drink Scotch, I don't drink bourbon. Do you invest in Scotch? And my answer to that, and they're also seeing Scotch investment products in the market. And my answer to that is that it's a very different product. It's a very different market. First things first, what you drink and what you invest in don't really have to be the same thing. People invest in, real estate that they live in, and people invest in real estate that they're generating cash flow from. It doesn't have to be the same thing. And, I don't have a deep opinion as to whether, Scotch is better or bourbon is better. So I'm going to leave that conversation alone. In terms of an investment, from a comparison perspective, I keep emphasizing that our fund is really very much of a commodities fund. Our whiskey, when it gets poured out into bottles, they go on the liquor store shelves. They do not go to the auction houses. Whereas, most of the Scotch whiskey funds I've seen are collectible funds. These are collectible. They're focused on the collectible side of things. So they will buy whiskey that's already aged and bottled and have a certain level of pedigree and have already increased a certain amount in value. They would buy that and hold that and wait for scarcity for that value to increase further. The aging in a barrel doesn't exist. Once you put it in a barrel, the aging process doesn't really happen very much. There's not that much oxygen to deal with. There's no more wood to absorb and be absorbed from an alcohol perspective. So in a glass bottle, there's not really much of an aging, from that perspective. But it does increase in value as more people drink the existing inventory, and there are no new inventory to be made of that vintage. So from that perspective, it is increasing in value, and that has been a decent investment. We took a look at that data from Knight Frank on this. Knight Frank is doing research on the top 10 categories of collectibles in the kind of high net worth space, so very luxury items. So they have Scotch whiskey, wine, art, cars, jewelry, furniture, and a few other categories. They have 10 categories. I'm sorry, I don't remember the last few. And the best performing one in the past 10 years is actually Scotch whiskey. And they return 5.6 times return from an underlying asset perspective. And that's over 10 years. So the question then is, over the next 10 years, are they still going to be the best performing asset? And can they return 5.6x thereafter? The other way of looking at it is 5.6 times in Scotch whiskey over 10 years is their target. And our target is actually 3 to 5 times over 5 years. I would say that our return profile, assuming either of them are achievable, is our return profile is superior to that. It's actually a faster ramp rate. And at the same time, it's a shorter lockup period for the liquidity. So from my perspective, that is a superior investment. And one last point is, because we're a commodity in nature, our alcohol can be sold quite freely to the wholesale market. There's actually quite a good liquid market to buy these barrels. And the alcohol at the end of the day is selling very well. Wilderness Trail is having a great year this year selling. When I first met them, they were selling just in and around 13 states in and around Kentucky. And now, as of this year, they're selling on the East Coast, West Coast, and some of the big states like New York, Florida, California, Washington State, and so forth. So their sales is expanding domestically. I think in a year or two, they'll also step up and do international sales. So the sales growth is actually quite good. So the demand for this alcohol continues to be strong. So as a commodity, I don't feel like I have an issue with getting rid of this portfolio. Whereas in the collectible space, to have a $5-10 million fund in high-end collectible whiskey, it's difficult to get rid of that inventory. You'll probably have to end up going through an auction process. The auction house typically takes quite a large margin, and there are times where things don't get sold. So liquidity from that perspective is much more difficult to organize. It's much harder. So from our perspective, it is a better investment in the various different categories. So I have a question on how big is the wholesale market annually. I don't have an exact number. I think you're looking for a number that's separate from the total sales number. And I would say that it's actually a good percentage of the total market. I can get that data for you later on if that's a huge point. I think our data should be available somewhere for that. And then we currently don't have any concerns for the number of barrels that we have. We currently own 1,500 barrels. We'll probably go up to 2,000 or 2,500 barrels by the close of this fund, by when we start operating. We have a window of 4 to 6 years to sell this whiskey. And also typically people buy in lots of few hundred barrels at a time. So I'm not really concerned about getting rid of the inventory. We're also seeing we're seeing a good increase in demand in the US and we're also starting to see increase in demand globally, especially in some of the more emerging markets where we're very excited about. We're starting to see inklings of demand out of China, which is a big alcohol market in general. Also, we're excited to see interest out of India. India is interesting because it has traditionally been a very big market for Scotch whiskey. It's very aspirational for the successful Indians to drink single malt Scotch whiskey and so forth. It's something that it's an aspirational thing. It's something that they really like to do. And I think the younger generation is looking for potentially an alternative to that, but in a similar vein. And I think bourbon could potentially play a big part there. We've heard that Suntory's opened an office in India to try to promote both bourbon and Scotch. They own Balmore. They also own Jim Beam, so they have plenty of inventory to promote both. But I'm hoping that means that bourbon will also get a good exposure in India. Also, we have heard Indian buyers showing up in Kentucky looking for large portfolios of aged whiskey. So, some of them are going home empty-handed because a lot of these allocations are already made. But it's very good for us to see that coming on as a demand. So we believe that in 5 years, all of these demands should be stronger than now. So we're not at all concerned about being able to sell our whiskey barrels. And once again, we also have a relatively wide time window. So if the moment we want to sell is maybe not the right time, we can check the market again in 1 to 3 to 6 months. And we do have that flexibility to make sure we capture the maximum amount of value that we can for these barrels. Okay, I think we're coming up on our hour. If there are any other questions, please feel free to message us. Once again, my email address is on the screen, and also, our associate Andrew is helping out specifically with this project, and our CEO also, if you want to reach out to him. Please feel free to reach out to me if you have any interest in the fund itself and also interested in this space. We'd be happy to speak with everybody and answer any other questions that you may have. So I think someone was asking about the presentation. I'm happy to send the presentation out. Feel free to drop me an email, and I'm happy to get more information to you. One final reminder, the fund is closing at the end of this year. So, if you are interested in potentially participating, please feel free to come and tell us pretty quickly, because it does take a little bit of time to bring clients on board and so on and so forth. So thank you very much for your time today. I appreciate you spending an hour of your time with us, and hopefully you found this interesting. Once again, please feel free to reach out to us.